Welcome back, everyone. This is my 2024 After Action Report. It wasn't the worst. I ended the year up 9.22% compared to the S&P 500, my benchmark, which closed the year up 24.89%. Although I beat the market in 2023, I am underperforming it on a 1-year and cumulative 2-year basis. Let's see what happens in year 3. I seemingly became a statistic in 2024, as in I roughly performed in line with the retail traders as well as underperformed the S&P 500. Here you'll see this image. Let me see if I can make it bigger. Of retail traders lag the S&P 500 index. The yellow bars are retail. The white bars are not. Not that it's much of a consolation, but many of the people I follow, my so-called echo chamber tribe, were down on the year. Seemingly everybody on Twitter was either down 10% or up 100%. But you won't hear me whining about the Mag 7 or the concentration of the S&P 500. Matter of fact, I've criticized these types of people here and here. Link in the article. Just look at the image below. What you'll see is that a person could have outperformed the S&P 500 with bank stocks alone. Hell, I almost bought CCB, the number 7 best performing bank, earlier this year. Quite frankly, KGS, Genie, and my cannabis basket saved me from a much worse underperformance. Joe, Val, AMRK, and URNM, which amount to roughly 30% of my portfolio, were mostly down double digits by year end. I'm actually surprised that my portfolio was up to the extent that it was in 2024. My performance peaked out in April at roughly 24% and bled out from there. Calls I got right. Insofar as the cannabis theme is concerned, which is where I was the most active in 2024, I made 3 broadly correct decisions. Skepticism around Florida Amendment 3 passing, dodged a bullet there. Buying grown rogue, that's me hitting a bullseye, and then buying Canadian cannabis companies. That's been mixed results, but a net positive. Outside of cannabis, the only thing I can confidently say I did was deploy capital around interim bottoms in the broader market. However, much of my deployment of capital was in the very names which dragged down my performance, which is Valeris and St. Joe Company, predominantly. Calls I got wrong. This is tough. I feel like I did most things right. Or should I say, I don't think I made any large unforced errors of commission. One can make a case that I made numerous small errors of commission via overtrading, which cost me a couple of percentage points on the year. The thing I'd say I did get wrong is that I did not respond at all in a timely manner to the lull in the offshore contracting cycle. This led me to round trip 100% gain on Tidewater, which I sold for essentially break even, i.e. did money over 1.5 years. Failing to recognize this lull to its proper extent also caused me to prematurely deploy capital into Valeris, thus increasing my cost basis and costing me optionality. I don't know the fix for this. I'm slow. I'm slow to respond to things in general. I don't get bothered much by quarterly noise, and by the time a pattern starts developing, I'm 3 to 4 quarters late to selling. The interesting thing is that in retrospect, I was going to underperform the S&P 500 regardless. Even if this basket I keep mentioning, Valeris, St. Joe, Uranium ETF, A-Mark Precious Metals, was neutral on the year or even up 20% on the year, I would have still underperformed the S&P 500. It also doesn't help that I own dead money stocks. What do I mean? St. Joe has been in dead money for 4 years. Look at this chart. Valeris is coming up on 3 years of being dead money. Then A-Mark has been dead money for 3.5 years. A commonality about all of these is that they got a re-rating higher during the pricing pop of 2021, in which most equities got re-rated higher. However, unlike many of the assets during that time, these haven't collapsed. They're trading range bound. Joe and Val are a discount to NAV story with either inflecting secular or cyclical catalysts. However, St. Joe's residential sales are slumping, along with much of the residential market. I also can't imagine that what's going on in Florida's insurance market is helping matters. I discuss that here, link in the article. Valeris is experiencing contracting dead space. Will these improve or worsen in 2025? I don't know. What I do know is that I need to be wiser about my cost basis in these names. I'll also note that this whole dead money phenomenon can go on much longer than I'd like. Take, for instance, Disney and Nike. Nike has been dead money for 6.5 years. Disney has been dead money for 9.5 years. I'm tempted to post 10 more charts of big companies which have been dead money for the last decade, but you get the point. The point being is that dead money stocks are dangerous. They drag down your performance, especially if you have sizable positions in them. I mention this dynamic for several reasons, but the least not being Grown Rogue. Here's Grown Rogue, and it's been dead money for 8 months. So far, it's been dead money for 8 months. Relatively speaking, that's impressive for a cannabis company, especially a US-listed one, since the vast majority of them were down on the year. But that's also beside the point to some extent, because what matters to me is absolute performance. So, to wrap up this section about what I've done wrong, I genuinely don't feel like I did much wrong within the consideration of the confines of my being. I'm frustrated by this. I'd much rather it be the case that I did something glaringly wrong, so then I would know what to fix or know not to do it again. However, if I did do glaringly wrong things, I am blind to it. Either I'm blind to my inadequacy, or I'm not as inadequate as my performance might make me think I am. I don't want to make a false positive of my inadequacy in a result-oriented way. It's something like, the decisions I made were net good decisions, or the decisions I made were the best decisions I could have made in my limited and fallible state. So, I mostly made the right decisions for my skill set, yet in absolute terms my decisions weren't sufficient due to my limited skill set, which is to say I need to improve my skill set. Which is, kind of a platitude because, okay, what does that actually look like? But that's a whole nother conversation that I won't get into. It boils down to how much of my 2024 performance was and wasn't my fault. I'm not going to ruminate and fester on this, so I guess I'll never know. I don't see anything glaringly offensive, so perhaps it was just an off year. Of course, this could easily be a marginalizing and dismissive attitude in an attempt to comfort my afflicted ego via cope and fallacy. The classic, it's not you, it's the market meme. Beyond the portfolio. I took writing on Substack more seriously in 2024. I also took Twitter more seriously. I detailed my thoughts around this topic in this article. Link in the article. Really, the whole Cup of Coffee Capital ecosystem is my stock portfolio, Substack, Twitter, and YouTube. I'm pretty much given up on YouTube, although I'm still involved because ever since I started posting my Substack articles on their platform, they've shadow banned me. I'll do YouTube for another year and then probably stop unless something miraculous happens. I thought it would be nice for people since a lot of people prefer to watch and listen rather than read. However, I'm not going to create a separate YouTube video every week. This brings us to Substack and Twitter. I will continue to engage with these platforms. Twitter is priceless to me. It's just incredible the information and people you get to interact with. I thought about doing a whole bunch of philosophical, psychological, and existential reflection, but honestly, I'm sort of tired of doing that. I need to engage more on a proximal level. If I did, I'd probably have more subscribers to my Substack. Things like demonstrate, don't explicate, show, don't tell, do, don't describe. If it's worth talking about, then it's worth doing, so on and so on. I'm exhausted with pointing things out and inconsistencies in people's arguments. I can do it for a living, except it's not going to pay the bills. It's kind of become a drag on my soul, too. I'll let them do them and I'll do me. I'm not sure if that's a New Year's resolution or not, but I'm tired of it for now. Even though I failed today on Twitter with this unappreciative individual, let's call him. There are a ton of lessons to be derived from these articles that I've written, but seemingly I'm the only one deriving any value out of them. And although my Substack is first and foremost for me, the aforementioned drain it takes on my mental health, coupled with people not appreciating it, is all the reason I need to curtail it. I'd bet half my published pieces are probably along these lines. Here's a handful of examples that come immediately to mind. Stupid stuff people say, NVIDIA edition. Stupid stuff people say, small things don't matter and inflation isn't an economic phenomenon. Glasshouse Brands, innocence never sounded so guilty. And this is one of my favorites, and it's about the CEO of Green Thumb, but it's also about basic human tendencies. The lessons transcend across the set of human experiences. That one's called In the Weeds of Misinformation. I suspect I've done a terrible job advertising my writing. For instance, my article on Grown Rogue has got a lousy 125 views on Substack. WTF? To conclude matters, I had a lackluster year in my portfolio, but insofar as personal development is concerned, I outperformed. Thank you for reading. Onwards and upwards.